This video, it's changing lives. According to my sources, more than 50 million people have already watched the Aftershock Survival Summit. They are sharing it on Facebook, emailing friends and family, and it has become required viewing at many investment groups. For example, we personally met a small business owner from Oregon. Her name is Carrie, and she has doubled her income as a result of watching this very presentation. We had a dinner with a professor from Atlanta who is facing bankruptcy, but is now in control of his financial destiny. This video was the game changer. And then there's Jerry Carpenter, a door salesman from Florida. When the recession hit, he lost 70% of his income. He didn't know if he would ever retire. But thanks to this video, he will now be able to retire at 60 and take his sailboat out for months at a time. These are real people who have already experienced their own recovery. Even if you've already seen parts of Aftershock, I think you'll be amazed if you watch it again. So much of what it talks about is coming true before our very eyes. Thank you.
Hello and welcome to Newsmax's Aftershock Survival Summit. My name is John Burke, and I want to thank you for taking part in this very important discussion. As you know, in 2006, while nobody was looking, neither the Federal Reserve nor the Treasury, not Congress or even the White House, the American economy began a catastrophic descent as the early stages of the real estate crisis started taking shape. 2 years later, in 2008, the true scope of the devastation became crystal clear as the stock market collapsed, the credit markets dried up, banks melted down, and unemployment began to soar. America was thrust into a recession and a period of national misery not seen since the Great Depression. Every citizen in this country felt the stress, the fear, and the uncertainty that came with not knowing how long the malaise would last and how deep the damage would be. Well, we all know this story by now, but why were the people in Washington, whose sole responsibility was to prevent this kind of a meltdown, incapable of protecting us from this crisis? Why did the leaders of America allow our country to sink into this financial abyss? Where were their voices of reason? And what does the future hold for our great nation? And how can you and your fellow Americans on Main Street stay safe from what lies ahead? We'll be addressing these issues today. And you're going to meet a true voice of reason that this country needs right now. You see, back in 2006, while the stock market was surging and real estate prices were soaring, an unheralded team of economists was working tirelessly to spread the word about the impending dangers that threatened our great nation. They released a book called America's Bubble Economy that accomplished what no one else seemed able to. They predicted with startling accuracy what would happen when America's easy money party ended. Their analysis was not the 2020 hindsight that's so commonplace today. They were well ahead of the curve and swimming against a tide of financial optimism. These maverick economists sounded the alarm about a chain reaction of crashes that were to come in real estate, the stock market, private debt, and consumer spending. They laid out a clear and straightforward message. The end game was near. If the powers that be had paid heed to these economists, the lives of all Americans would have been better. But their warnings were not welcomed by the mainstream media or by those on Capitol Hill. And the devastation is still being felt to this day. Sensing that the worst was still to come, this team of economists returned in 2009 to pen the follow-up book, Aftershock. This time, Americans were willing to listen to the unfortunate truth about our nation's financial health, and Aftershock quickly became a bestseller. This incredible book predicted that two more massive bubbles, the dollar and U.S. government debt, could burst by 2013. And since the release of Aftershock, we have indeed seen the dollar continue its dangerous downward spiral. And as our federal debt keeps surging to unsustainable levels, it's clear that these three economists were right again. You need the real story and what steps to take to stay safe before a second and much more destructive economic meltdown possibly strikes the United States. And that's why we are joined today by one of the three economists who has been helping Americans prepare for the coming crisis. Bob Wiedemeyer, thank you for being here.
My pleasure, John.
Bob, my goal for this interview is to work with you to build an effective action plan for our viewers regarding their homes, investments, retirement savings, debt management, life insurance, and even jobs. But I want to start by saying that you're also not going to mince words or paint a rosy picture for our future. So, Bob, would you say it's safe to say that our viewers need to be prepared for your message that any signs of a recovery may be nothing more than false hope or simply an illusion?
That's right, John.
All right, well, with that, let's get started. Basically, your message in Aftershock was that the recession was bad, but that the worst was still ahead, and Washington is still ignoring the problem. Is that correct?
Well, yes and no. I do believe we have some very tough times ahead for our country. And most in Washington are refusing to address the true scope of the situation. And millions of Americans will face some difficult hills to climb to avoid getting caught up in this economic disaster I see unfolding. There is no getting around that. We are past the point of no return. And people are starting to realize this. CNN released a poll just a little while ago that stated 48% of Americans see our country headed into a second Great Depression in a year or two. I slightly disagree with that timeline, but not that diagnosis. Fortunately, right now, we're still in a critical period. A few simple decisions can be the difference between personal economic obliteration and financial prosperity. This is a situation to be taken very seriously. I can't be any clearer than that.
Okay, before we talk about what lies ahead, let me quickly ask you about the past. How did you predict this multi-bubble collapse while nobody else seemed able or willing to recognize the dangers?
Well, most economists looked at these situations as independent occurrences. They didn't take a broader view to see the chain reaction that could unfold. Since most people aren't trained economists, I usually try to simplify this explanation. So imagine a balloon. You start with a dramatic and artificial increase in home values and the stock market. This basically put all the air into the balloon.
Why do you say it was artificial?
Because people weren't making the kind of money needed to justify these increases. From 2001 to 2006, housing prices accelerated much faster than our income. Now, we all know that housing price growth was due to the mortgage madness, where people could easily obtain loans with no documentation. Liar loans, they were called. So some lenders blatantly looked the other way, and others repackaged these garbage loans into toxic investments.
And this wasn't happening before 2001?
Not really. From the 1980s to 2001, home prices rose in step with inflation, and then in 2001, they just exploded. But nobody stopped to think about what would occur when home prices weren't rising 10, 20, even 50% a year anymore.
And you saw a similar problem with the stock market, right?
Absolutely. It was very susceptible to a massive correction because just like housing, the rapid rise didn't match the underlying fundamentals economists chose to ignore. It's pretty simple. From 1928 through 1982, you had about a 300% rise in the Dow. That's a 54-year period. Yet from about 1982 through 2005, it rose another 1,400%.
But that doesn't sound like a bad thing, though, right, Bob?
Well, that would be fine if our economy grew 1,400% too, but it didn't. Personal income only grew about 10% over this time period, and company earnings about 300%. So the foundation beneath these market gains was very fragile, and the balloon became massively inflated.
So now you've basically got this economy that's completely full of hot air, right?
Exactly. Now the real estate market collapse applied enormous pressure on an already overly inflated stock market. And as foreclosures began to grow in numbers and the banks became weaker, it became harder to get credit, which was a shock to the system because Americans had become very spoiled by this easy money. In fact, between 2001 and 2005, an estimated $2.4 trillion in wealth was created from the refinancing of mortgages and home equity loans. This money was only available because of artificially escalating housing prices. But when this easy money spigot was shut off, a private debt crisis was created. Look at the chart on your screen now to see how fast Americans grew their debt compared to their income. So real estate and Wall Street collapse dried up the easy money, and this led to a massive correction in consumer spending. This is a big deal. Many people don't understand that about 70% of the U.S. economy is built on consumer spending. These four bubbles bursting created one massive American explosion.
There you go. And we all know what happened next. $16.4 trillion in household wealth disappeared. These losses were felt in our investment portfolios, retirement savings, real estate holdings, and salaries. And you know, it's still just stunning to me that you were in such a minority of voices that saw this travesty unfolding. Hardly anyone was waving the red flag besides you and your team.
Well, most economists didn't see this coming because they couldn't see the forest for the trees.
But you didn't stop there. In 2009, you released the best-selling book Aftershock, which warned Americans of dollar and government debt bubbles that were set to expand from 2009 to 2012 and burst around 2013. Well, in the last year alone, the dollar has dropped, and since Obama has been in office, we've piled on another $3.7 trillion onto our already dangerous federal debt tab. And serious minds like billionaire bond investor Bill Gross believe that the total tab could be $75 trillion or more when you account for Medicare and Social Security. He's even gone as far as to say that the United States will default on its debt while picking the pocket of every citizen through inflation, dollar devaluation, and interest rate games. Now, Bob, our viewers would be in a better place right now if you were wrong on these predictions, but unfortunately, you've been right all along.
Yeah, everybody wishes we were wrong. Count me in that group. But ignoring a problem this large is not the way to stay safe from it.
Now, before we dive into what lies ahead, our viewers could use some good news here. Bob, you and your team have completely updated Aftershock with new analysis, predictions, and powerful guidance. And you are releasing this bold second edition with an even more blunt assessment of what's to come in the years ahead. And here's something that will get our viewers very excited. You're going to give everyone who's watching this interview a free copy of your new book. Even better, you're including the final chapter that was deemed too controversial to be included in the version that will be sold on the newsstands and Amazon.com. So this is a new edition of Aftershock, right? And should the hundreds of thousands of people who read the original get a copy of this latest version as well?
This is absolutely a new edition. And if you found the first Aftershock helpful and informative, this version will be even more valuable to you and your family.
So, just to be clear, only people watching this interview can get this book for free as well as the hidden chapter, right?
That's correct, John.
Well, that certainly is good news. So, what's in this hidden chapter anyway?
Well, just like with the original Aftershock, we've included a great deal of analysis, predictions, and guidance for readers throughout this book. And also, just like in the original, we paint a pretty grim picture of what America will be like if our findings come true. And we left this for the very end in a separate chapter. Well, the publisher believed this final chapter would be found by certain readers, at least, to be a bit too aggressive or startling. So the publisher thought that this could be a problem for some who picked it up at a bookstore without realizing what Aftershock was about. Now, it's not some sort of apocalyptic, end-of-the-world kind of chapter. We just talk about what day-to-day life will be like when the next great meltdown occurs. We also reveal an additional hidden bubble that's being completely ignored by everybody. And we put some great investing and personal finance advice in that chapter as well. In fact, my team and I built a step-by-step wealth protection checklist into this chapter. It covers how to approach your investments, personal finance, and debt in the short term before the toughest times arrive. And we also lay out a simple-to-follow and effective long-term blueprint for safeguarding your finances when the economy really gets bad. So this hidden chapter is one of the most important in the entire book. But at the end of the day, the publisher just didn't want to take the risk. However, I imagine the people watching this interview right now are a bit more prepared for this kind of analysis. So my team and I are happy to personally send this chapter to our viewers. And I've even autographed the first 1,000 copies of the new edition of Aftershock to give out today.
Okay, Bob, let's talk about the future. What's in store for our economy?
Well, to put it simply, we now have a situation where the medicine has become the poison. The federal government and politicians on both sides of the aisle have done everything they can to give Americans the appearance of a recovery. They bailed out their friends at the banks and automotive companies, they've kept interest rates at historic lows, and they allowed the Fed to turn on the printing presses and drastically grow the monetary supply by 300%. And all this has done is delay the inevitable. We will all soon see that while printed money has been the medicine of the so-called recovery, that medicine is about to become the poison when the dangerous side effects kick in.
But this doesn't seem to be hurting the stock market. As a matter of fact, since bottoming out in March of 2009, it's up as much as 94%, and many are saying that it could top pre-recession levels in the near future. So couldn't that be a sign of a possible recovery?
That's all an illusion. Look at this chart and you'll see the stock market's initial gains simply shadowed the money printing trail. And it won't be very long before this money from heaven becomes a path to hell, that hell being inflation. You see, that 300% increase in the money supply we've experienced, well, much of it is sitting in excess reserves in the Fed and with the big banks. These funds haven't made it into the markets and the economy yet, but it's a mathematical certainty that once this dam breaks and this money passes through the reserves and hits the markets, inflation will surge.